In this lesson, we break down two essential concepts in Forex trading: pips and lots. These are the units traders use to measure price movement and position size. Once you understand them, Forex pricing becomes much clearer. For weekly market breakdowns and actionable trading insights, don't forget to subscribe to the Blueberry YouTube channel. Let's start with pips. What is a pip? A pip stands for percentage in point. It is a standard unit used to measure price movement in a currency pair. For most currency pairs, a pip represents a movement in the fourth decimal place. For example, if EUR/USD moves from 1.1028 to 1.1029, that 0.0001 change equals 1 pip. However, there is an exception. When the Japanese yen is the quote currency, pairs are typically quoted to 2 decimal places. In that case, a pip represents movement in the second decimal place. For example, if USD/JPY moves from 110.25 to 110.26, that 0.01 change equals 1 pip. What is a pipette? Some brokers quote currency pairs with an extra decimal place. Instead of 4 decimal places, you may see 5. Instead of 2 decimal places for yen pairs, you may see 3. That extra digit is called a pipette, also known as a fractional pip. A pipette is 1/10 of a pip. For example, if EUR/USD moves from 1.10285 to 1.10295, that is 1 pip, even though the 5th decimal changed by 10 points. Pipettes provide more precise pricing, but the standard unit traders refer to is still the pip. What is a lot? Now let's talk about lots. A lot refers to the size of your trade, meaning how many units of a currency you are buying or selling. In standard Forex terminology, a standard lot equals 100,000 units of a currency. A mini lot equals 10,000 units. A micro lot equals 1,000 units. A nano lot equals 100 units. You do not need to trade large amounts to participate in Forex. Many brokers allow trading smaller lot sizes to help manage risk. Why this matters? Pips measure price movement. Lots determine your position size. When you combine the two, you calculate your potential profit or loss. For example, a 10 pip move on a larger lot size will result in a bigger gain or loss than the same 10 pip move on a smaller lot size. Understanding pips and lots is fundamental to risk management and position sizing. If you'd like to apply what you've learned in a practice setting, you can open a free Blueberry demo account to trade in a simulated market environment. Follow Blueberry for more educational videos and actionable trading insights designed to support your trading journey.